seeing that bounce back. And I think really at this stage, as my colleague said there, a real indication is probably going to come from next month's numbers more than these numbers we see here.
The week report could revive talk of a rate cut coming in February. That expectation's waned recently as we've seen iron ore prices rally and the background get a little brighter. But the RBA's decision will largely depend on inflation figures due next week.
The case for a rate cut is kind of building, but we still think the RBA would hold off from cutting rates in February and March. That's just given that the global picture, that's looking a bit better. Chinese growth looks to have stabilised and maybe picking up. And in addition to that, the RBA did just cut rates in October and December, so we think that the RBA would like to wait and see how the impact of earlier rate cuts are having on the economy.
Now, breaking down the jobless rate by state, the Northern Territory still has the lowest out-of-work rate at just 3.8%, followed by the ACT and WA. New South Wales is rung in at 5.1%. Victoria and South Australia are in the mid-5s. Queensland's notched up to 6.2%. Tasmania has reported the biggest rise and has the highest rate at 7.3%. Well, let's get some more on this. Of course, as we mentioned, we've got our guest host, Andrew Chan, partner and senior financial advisor at Henderson Maxwell, with us here in the studio. Also joining us now from our Melbourne studio, Cameron Judson, the chief executive of recruitment company Chandler Macleod. Cameron, just looking at the read on jobs, in your view, what, a little worse than expected?
Good afternoon, Bridie. I think the numbers were largely in line with expectations. There's obviously a structural shift on foot in the Australian economy, and you're beginning to see that play out, particularly in a geography like Queensland, with the convergence of coal prices, the Australian dollar on tourism, and the changes in that market with the government and the shedding of jobs in that market.
Andrew, can I get your sort of overall thoughts on you know, what you were seeing, what jumped out most for you in this latest report?
Yeah, what's interesting is the markets were forecast to have an increase of 5,000 jobs. And it's not in line with market expectation. And what we've actually seen is a decrease in full-time jobs, which is a concern that some of the steam is heading out of the economy. My question would be, do full-time jobs, will they seek to improve over the coming months?
Sure, okay. Just getting your thoughts, Cameron, on what you sort of think. I mean, the anecdotal evidence that you're seeing. I mean, we do, you know, we've had that weakening ANZ job ad survey, 10th straight monthly decline, all that, the headlines of the losses from, you know, the likes of Boral, 10, the big newspaper publishers, the car makers over the past 6 months or so.
I think you described the first half of last year as a patchwork economy, and the second half of the year was more of a slowing economy. Our assessment of the market leading into Christmas was employers were largely very, very cautious about permanent hiring decisions. So we're not surprised by that in terms of the December result. There was a bit of seasonality in terms of a move to casual and part-time jobs, and it'll be interesting to see how that plays out in terms of how confident people are in January and February this year.
Just looking, I guess, then at you know, your thoughts on, you know, perhaps where the official unemployment rate then is heading. I mean, we've heard some economists talking about 5.75%. I mean, how high is it going to get, do you think?
I anticipate it'll go up slowly, and part of that will be a function of most employers seeking to do more with less, and a real focus on how they lift productivity within their existing workforce. And that will, to some extent, I think, slow hiring intentions. And in other businesses, in other sectors, as they experience different circumstances, I suggest that, you know, under margin pressure, they'll pull the cost lever, which will lead to decline in jobs in some sectors.
Hi, Cameron. I had a question around, there's been a bit of talk with that cost pressure for a lot of the small businesses that they're looking to social media to do a lot of their hires. Do you see that as a trend?
I do see in the SME space some reticence to using specialists such as ourselves and others in our industry to pay a fee to source talent. And I do think social media absolutely has a place as a channel to market. Where I think we add value is around de-risking that decision and helping people make informed decisions about skills, qualifications, experiences and references. I do think... Sorry.
Sorry, Cameron, continue.
I was just going to say, so I do see a shift in terms of the adoption of social media, but I see it as one channel to market.
Just finally, Cameron, wanted to ask you, I guess, which sectors you're going to be watching most closely in terms of hiring and firing this year for signs that perhaps things aren't going to be as bad as feared or perhaps, will be?
I think that's a very good question. Last year's employment growth was largely in mining, construction, healthcare and engineering. And to the extent that there's still some investment pipeline, I think construction and engineering are looking reasonable. Healthcare, I think, with the ageing population will always be skill short. Mining may well have peaked. So we'll be looking for signs across the broader economy in retail, principally led by consumer sentiment, that the broader economy and where the growth in real employment is also show signs of growth this year.
All right. Great to get your thoughts, Cameron. Thank you so much for joining us.
Thank you for the opportunity.
Cameron Judson there from Chandler, Macleod, CEO of that recruitment company. All right, let's get the reaction on markets. We're joined now by Ben Lebrun from Options Express. And Ben, it was pretty clear, wasn't it, what investors in equities and in currencies thought about that employment report?
Yeah, it was, Bridie.